Are you familiar with the acronym PITIA?
Nope.
Well, good news. You're going to find out today.
I'm Jenny,
And I'm Dan.
and today we're going to talk about mortgage rates, what effect they have on your payment, and upgrading your house. So, Dan, tell me a little bit about yourself. How long have you been in the mortgage industry?
Yes, I've been in the mortgage industry since 2008. I started at a regional bank and I worked there as a branch manager, which I primarily did mortgages. In the precipice of the Great Recession, right after the housing crash, so it was a very interesting time to get into the mortgage business, but it was a perfect time because every year had been better than the last.
So, since that time when you entered the mortgage industry, can you give me like an overview of what the rate environment has been? What the rates, I know in 2008 were the rates super low.
No, in 2008, if I remember correctly, rates were somewhere in the middle sixes, maybe around seven, and not too dissimilar from where we are today.
Okay.
In fact, I remember driving down the road. It was just before I had bought my first home. And I remember seeing an advertisement for a 6% mortgage rate. The builder was subsidizing the rate in that situation. And I remember thinking 6% is so low. Man, if I can get 6%, I would be set for life.
It's very similar to what the rates are today. So why do you think people, when they look back at 2008, why is that buying environment different than today's buying environment if the rates are the same?
Oh, it's completely different because we were just coming off of a crash. And as a result, home prices had dropped tremendously. Depending on where you were in the country, some places more than others. Here in Florida, it dropped a lot. And so the first home that I bought was only $120,000.
Wow.
Could you imagine buying a 3-2 single family home for $120,000 in this market today?
Nope.
That was just the nature of the housing market back then. So even though rates were a little bit higher, affordability was actually much better. And in fact, in a lot of circumstances, you can buy a home and pay the mortgage for a lot cheaper than you could rent.
So lower prices, higher rate was still a better situation than higher prices, same rate, because that all goes into your payment. Tell me a little bit about what goes into your mortgage payment. It's not just the price of the house, right?
Correct. There are so many things that go into your mortgage payment. First of all, the payment itself, we can break that down into 5 different categories that we refer to as PITIA: principal, interest, taxes, insurance, and association fees. And association fees are big here in Florida. It seems like every neighborhood has an association fee of some sort, right?
So that means HOA.
Yeah, HOA.
HOA fees.
Absolutely.
Gotcha. Okay.
Yeah. So when you break it down, those 5 things equal what you owe your lender, assuming that your taxes and insurance are escrowed. And especially for first-time home buyers, that's almost always the case, that their taxes and insurance are escrowed, meaning that they're included in your mortgage payment. But then the cost of owning a home goes beyond just your mortgage payment, right? I mean, you have to now, if you are moving from a situation where you were a renter for a long period of time, you now have to be responsible for your own repairs and your own maintenance on the house. I remember when I first moved into my first house, no one told me that I had to change my AC filter. I just did not know. And so it took me like 3 years to realize that I had to change that air filter. Needless to say, I had some maintenance issues with it.
Yeah, your AC was slowly dying.
But once I figured it out, you start to figure these things out. I had to worry about having a lawnmower and an edger to cut my grass. I had to worry about the roof. I had to worry about what type of homeowner's insurance I had and when it renewed, shopping for a better premium, what kind of coverage it contained. All things that you generally don't have to think about as a renter. So there's a lot more that goes into owning a home. And a lot of people don't know that when they're first-time home buyers. So it is really important to do your research.
Absolutely. Now, when people maybe are getting a new job, maybe they got a raise, maybe they got a new job, their salary's all of a sudden bigger, and they think, oh, I can upgrade my house now.
Yeah.
Does a bigger house, does that always make sense to make that your first move when you get a bigger budget?
No, it doesn't. So an interesting phenomenon happens to people as they make more and more money. It seems like their expenses go up with the amount of money that they make. Generally, that's a bad financial move. So you want to be more diligent in that. Are you needing a bigger house, or do you just want a bigger house? And when we talk about finances, we have to break down needs and wants, right? Because just because you're suddenly making more money doesn't mean that you have to keep up with the Joneses. It doesn't mean that you should have a bigger house and a bigger mortgage payment and bigger heating costs and cooling costs and everything else that comes with owning a bigger house, because now you're in a fancier neighborhood, fancier or higher HOA fees. And it's just a snowball effect. And so what I'd say is that there are legitimate reasons to upgrade. People have growing families. They run out of space. They have just more needs. Maybe they need to move in an aging parent, have a mother-in-law suite, so on and so forth. I'm not saying that there's never a reason not to upgrade. But if your sole reason to upgrade is because now you're making more money, well, then I would reevaluate what your priorities are.
So rates obviously go up and down. You said in 2008, they were about 6%, 7%, which what they are now. So obviously in between now and then, they've gone up and down.
Yeah.
What do you tell people? I've heard that you should wait on the rate to drop before you buy a house. I don't know what that means. I don't know what you need to wait the rate to drop to. So what do you tell people that say you really need to wait on the rate before you buy?
So what I'd say is that you're probably using the wrong metric to decide whether or not you should buy a house. Waiting for the rate to drop, I know the mentality there or the rationale there is, well, if the rate drops, then my payment's going to be less, and therefore my house is going to be more affordable. However, in economics, what happens is that when the rates drop, then housing becomes more in demand. And when housing becomes more in demand, then the prices will elevate, and it'll offset a lot of that, the savings that you have from the lesser rate. And so what I would tell people is, do not wait for the rates to drop as your strategy. What you should wait for is when you're in a financial position to buy that house. And when you're in that financial position, well, what about the payment? Let's look at the payment first. Is it roughly 25% or less of your take-home pay? If it is, well, great. You can cash flow that house very nicely then, and that you are financially ready for that monthly commitment. Now, the other factor that we have to consider is a down payment. Are you in a position where you could put down, say, 20% or more, avoid PMI, and have even a lesser payment on the house because now you don't have PMI and you're able to cash flow it well? And so if you're able to be there, well, I say now is your time to actually do that. Also, I would say evaluate your savings. Is your emergency savings account fully funded? Are you ready to take on repairs that come with a house? Because things always happen. When you buy a house, even if you buy a brand new house, you're going to want to do some things immediately, right? You're going to want to paint some walls. You're going to want to move things around. You're going to want to maybe refinish something. And I promise you, maintenance will pop up, even in a new house, pretty early on. And so you want to be prepared for those things. But if you have those three things ready to go, you can cash flow the house because the monthly payment is roughly 25% or less of your take-home pay. You have a healthy down payment. If you're a repeat home buyer, we usually say 20% or more. If you're a first-time home buyer, you can usually get away with putting 5% down. And then also your emergency fund. If you have that stocked, ready to go, 3 to 6 months of your expenses, then I'd say you're in a pretty good position to buy a house. And then later on, you can refinance it when rates go down.
So you're saying focus on what you can control. You
Right.
can control your own financial situation. You're not going to be able to control the rate or predict the rate with any
Right.
sort of reliability. So make sure your own finances are in order. And if it makes sense, buy the house. And if it doesn't, you need to wait until you are in a position to do so.
Absolutely.
Is there a time that you have to wait to refinance? Like 1 year, 5 years? Is that dependent on the loan that you have, or can you refinance at any time?
Typically, you can refinance at any time. There's something called the rate term refinance, where you're just refinancing the balance of your loan for a lower rate. And a rate term refinance, where you're just refinancing for a lower rate, you can generally do it at any time.
Interesting. For some reason, I thought that you had to wait. Is there maybe a rule of thumb or a myth? I just thought it was like 3 to 5 years. You weren't allowed to refinance.
You're allowed to
Or-
refinance. It's just very unusual that someone would refinance so soon after buying a house because generally speaking, the rates don't go down that fast, right? So if you're waiting for the rate to go down to about 1% less than what you currently have, then you're going to be waiting usually at least a couple of years.
So really, you shouldn't be focused on so much on the market and what's going on beyond your control. When making a home buying decision, you should really focus on your financial position, what you can control. And if it makes sense for you, it's a good decision. And if it doesn't, you should wait it out.
Absolutely.
Thank you, Dan, for all your advice today. I know you've helped me understand the rate situation better, and I hopefully a lot of you as well. So make sure you like, comment, and subscribe for more financial advice. And thank you so much, Dan, for being with us today.
My pleasure.